Hey there, Teresa Tims, president of TDR Mortgage, and you can find me on the web, SoCalLoanPro.com. You're probably watching this on my YouTube channel, and I'm so happy to share with you some of the first-time home buyer opportunities that are in the marketplace right now that we're using and offering to our clients. When you come to TDR Mortgage and you ask us, hey, I want to buy a house, one of the things that we do is we evaluate all of the programs that are available to you. We break them down, and then we recommend to you what we think is the best program for you. And then, of course, after our education process, you have enough information to make the decision for yourself. So let's get started at a $425 sales price. $425 sales price is a common price that would be used for conventional Freddie Mac or Fanny Mae financing and FHA. So let's get started. All right. So this is a financial data sheet. We do this a lot of times for agents that are hosting open houses so that they have a reference point for buyers that are coming to view their properties. So the first program that I'm going to feature, I like this program for this sales price specifically because of the amount of money that you're going to need to get into the property is around $3,000 to $4,000 total. Buyer programs in California have a lot of restrictions to them, mostly having to do with debt ratio qualifying. So you'll find that on a buyer program, you may only qualify to a 325 sales price because you're restricted to a 45% debt ratio. Whereas with an FHA program, you might be able to purchase up to 390 or 400,000. So just a little bit of insider info for you. So the CalHFA program, CalHFA stands for the California Housing and Finance Authority out of Sacramento. I've been originating these loans since 1998. They have a really great track record. We're able to close them in like 30, 40 days, no problem. So the CalHFA program, there's a handful of nuances. You can do it FHA or conventional. Here we've got a conventional program, 3% down. Now, the way that you're only able to get in for $3,000 or $4,000 is because they offer to first-time buyers a silent second and a silent third. Now, on a $425 sales price, you're going to have to eventually repay this $27,000 when you sell or refinance, plus interest on the second. It fluctuates. It's been around 3% simple interest, so it's not a huge money maker for them. And on the third, it's a zip called as reference as a zip, so it's zero interest product. Okay, so you can see that the total payments $3,100, funds to close $35, interest rate 6%. Now you'll notice this is a higher than average or higher than market rate interest rate, and it's just something that you it's a price to pay to get in with only $3,000 to $4,000. The next program, a platinum 3% conventional buyer program. This is a very unique program in that it forgives the amount that they assist you with. On this particular instance, we're highlighting this for teachers. So 3% down payment. We're going to try to get 3% from the seller. So you're going to get in with a total of $6,500. Now, what's cool, you have a $20,000 grant that you're getting for all of your down payment closing cost. And if you're a teacher, it's forgiven the day after your close. So guess what happens in 6 months? We're going to be going and helping you get refinanced in 6 months to go down to a market rate interest rate. So you'll see that the rate's 6% and the funds to close are around $6,500. The payments around $3,100. So the beauty of this, when you're comparing and contrasting these two programs, here you're going to owe 27 to somebody, right? Here, you're not going to have any future liability. So that's pretty darn cool. Okay, so I kind of feel like these are my two favorites when you don't have a lot of money to work with. The next program is the Platinum 3.5% down FHA program. So this is, again, is a teacher program. So when you look at these two together, I don't know, I'm liking the 3% conventional as opposed to the FHA. So you don't get as much money on the FHA as you do with the conventional. So here you need $11,000. Payments $3,200. The reason it's a little higher is the FHA monthly mortgage insurance premium is higher. Rates lower, however, 5.625. This grant is forgiven the day after you move in. And in this situation right here, we would be looking to streamline your rate down lower. This one doesn't make a whole heck of a lot of sense to me, because just right down here is the FHA loan. And yeah, you do need a little bit more money. The rate's a heck of a lot lower, almost a full percent, and it's $250 a month less. So when you're comparing and contrasting these two programs, why not come up with just a little bit more money, and you get in with a lower payment from the get-go. Now, what if you have access to a little bit of money? Well, when you have access to money, it is overall better rate and term for a buyer. So in this situation, we have a conventional 3% down home ready program. And programs through Fanny Mae and Freddie Mac offer below market rates on the monthly mortgage insurance along with the interest rate. So here you'll find the payment is only $2,800, $2,900. So obviously, when you're looking, comparing and contrasting all of these payments, $2,800 is obviously the better payment, right? But look what you have to come out of pocket. You have to come out of pocket with $23,000. Now, I don't know about you, but it's hard when you're, a lot of us live paycheck to paycheck. We might be able to afford $2,800, but rent, but we certainly don't have $23,000 laying around. However, if you do, you can see that this conventional 3% down product is going to be superior to get you in with the least amount in monthly payment outlay. So I also want to call to your attention that the principal and interest is calculated off of a 700 credit score. A tax rate in California, in Southern California, is pretty uniform. We use a 1.25%. And basically what that means is so on $100,000 house, the total annual tax is 1.25% of the sales price divided by 12. So sorry if that's a little bit confusing, but that's a standard rate that we use. New construction is a lot of times higher. And the fire insurance or the hazard insurance, property insurance, we're using a 0.25 rate. So when we're talking about this monthly payment, we're talking about the total monthly payment, principal, interest, taxes, insurance. So that's it in a nutshell. Those are your first-time home buyer opportunities here in the Southern California market. When you're looking to buy or sell, please don't hesitate to call us. We are your first-time buyer experts. Have a wonderful day. I'm going to shut this down.